Hello, everyone, and welcome back to another weekly portfolio update in our paper account. Before we jump into there, I just wanted to take a look at the charts for the positions, the growth positions we have open in the paper account. But I happened to notice a little bit of a pattern. And if you notice that when AMD opened this morning, we had started off with a sell off. It hit this pre market low, got stuck. The buyers stepped in, pushed the price up to the pre market high, and now it's stuck up there at the level of resistance, and now it's being sold off again. So we got this kind of ranging behavior going on. But I happen to notice, like with the morning opening up, and then you have a sell off and the buyer stepping in. That's Meta. SOFI. The market opened, there was a sell off, kind of went this way, and then the buyer stepped in. Let me see where they are with the pre-market. I didn't quite hit the pre-market high on this one, but it hit a level like 1875. Sellers were like, okay, we're going to start selling here. And then you will notice with Celsius H, the market opened, there was a sell-off, and now it's just kind of consolidating. So it did less of that on Celsius H. ELF, the market opened, there was a sell-off, went beyond the pre-market low with ELF here, and then it found some level of support down here around 53.17, and there was a little bit of buying, and now we're just kind of ranging here. And so when I happen to notice that all of my assets that I'm trading, when I open up the chart, they're all behaving the same way, that indicates to me that that's something going on in the market. That's not necessarily a problem with a company. Now, if all the charts were doing something one way and I had one company going down and selling off, that makes me think, well, geez, what happened with this company here? Then I will go on to CNBC, take a look, or I'll say, why did this stock, what's going on with this stock today? And I'll usually find some sort of news report or an analyst readjusted and changed his mind on a price target or turned his buy to a sell or something that got retail traders or whomever was selling saying, yeah, maybe this is getting too risky, we're going to jump off. But when I see all of the positions pretty much behaving the same way, that tells me it's an overall market sentiment. So I just kind of wanted to point that out. Now, we are looking at the paper trading account. And as always, the goal of this series isn't to show perfect trades, it's to document the real process of building a diversified portfolio one step at a time and let you follow along week by week. And if you're finding these videos later, you'll be able to go back and watch the entire journey from the beginning, which was April 1st, 2026, see how the portfolio evolved through different market conditions. This week was a fairly quiet week. Well, it's just starting to, but like SOFI was waking up a little bit last week, and there was some volatility, but not a whole lot that made me say, "Oh, we need to jump in on this move right here." So earlier in the week, last week, I added additional shares of SOFI. I recorded that transaction so you could see exactly how I entered the trade and why I made the decision. Today is more of a portfolio review and check-in than a trading day. Currently, the account is sitting at approximately $9,012, which puts us a little over $1,000 or about 14.5% since we started the project 3 months ago. One thing I want beginners to understand is that not every week requires action. Sometimes the most productive thing an investor can do is review the portfolio, evaluate the positions, and simply allow time to work. Looking through the holdings, AMD continues to be one of the strongest performers in this account. VTI and SCHD are doing exactly what we want core positions to do. SOFI has continued to strengthen and remains one of the positions I'm building around. Celsius H and ELF are some of the smaller positions and remind us that not every stock moves in a straight line. As for SOFI, we're currently sitting at 89 shares. One possibility I'm considering is adding the final 11 shares needed to bring the position to 1,100 shares. The reason isn't because I feel pressured to buy. The reason is that 100 shares would allow us to demonstrate covered calls in the future if the opportunity presents itself. That's an example of making a trade with a purpose instead of trading simply because we're looking for something to do. So let's SoFi. So we got SoFi for $17.22 a share on average for the 89 shares we own. It's currently trading around $18.54. And I know there's strong market resist. There's going to be a strong level of resistance at the $20 level. So no matter what happens with this thing, it's going to take a lot for it to break through that $20 level. So I'm going to go ahead and add those last 11 shares in here. There's two ways for us to add those shares. You could simply hover over the quantity of shares, right click and add to the position, which will bring up your order box, order entry toolbox. The other way, and I'm going to show this just in case you happen to be clicking on this video and you were not here when we went through the other ways to add shares. You can go to your trade tab here, make sure you have SoFi in the ticker, and if you hover over the price here, you can go ahead and you click on buy, and you can bring up your order entry box that way. So let's pop in 11 shares of SoFi. Oh, wait a minute. There we go. 11 shares of SoFi stock is currently trading at around $18.53. So let's do a couple of things here. Let's say we will buy them if it comes down to $18.50. We're going to make it a limit buy. The padlock is on. The timing force is by the end of the day. And if the price very well could come down to $18.50, then it will go ahead and fill the order. So we will hit confirm and send. Here's our order confirmation dialog box to buy 11 shares of SoFi at $18.50. That would cost us $203.50, leaving $661.21 left in cash. In our IRA, I'm going to click send. Oh, actually, we're already at the price. It should fill it. And then, like I always tell us, what happens to the order when you place a limit buy and it has not yet filled? You go under your monitor tab. Let me move my little box over here. Under working orders, because it would look like this. You see how you have your one order? You click on that. And here's where it lives until it fills. If it does not fill by the end of the day, well, there it goes, it just filled, then it would just close, the broker would just null out your contract. Like you wouldn't buy it, it would just do nothing. But as you can see, the order filled. So now SoFi currently has 100 shares, which brought up our $17 trade price just a couple of pennies because we bought it for more than the trade price is. But it's around where it is. Now, ideally, I would like to have 20 to 50 more shares. The reason being, when you sell a covered call, you collect a premium and you earn income. However, you run the risk that the person that buys that contract may decide to want the contract done, wants to fulfill a contract, and you may get assigned, and they'll buy those shares at the strike price we would pre-select, and we'll go into it when we get to the class, but I'm just going to kind of give you an idea for you to wrap your head around how that exactly works. So I basically tell them, look, I have 100 shares. I will lease those shares to you for a price that I would pick. And that's when we will start getting into the option chain and all that. But we're not going to do that today because I want to keep this more beginner focused. But I'm letting you know why we picked 100 shares and what I'm doing with that particular call here to make sure that I have these 100 shares. And then I can pick the strike price, where whatever it is, you pick the price that you're willing to sell them. So my recommendation is, in my mind, I'm always going to sell the shares for $2 more than I paid. Because remember, it's a contract and one contract controls 100 shares. So I know that, let's say, for example, the strike price was $18. a share. Well, I wouldn't do that because we paid $17.36. So let's say 17.36, $20. Let's say it's $20 strike price. If it gets assigned and they want that contract and I get assigned to sell my shares, I will at least lock in that $2 per share profit plus the premium. And that's kind of my little psychology around selling the cover calls. But if I do get assigned, I don't have those 100 shares no more. So I want at least some exposure to SOFI because I do want them in our portfolio because I keep them in mind. I want them long term. But I also want to be able to sell cover calls against the shares. And that's why if I had 200 shares, I'd be able to sell 2 contracts. But we're dealing with a beginner account, and I wanted to make it at least to where I could show you how to sell at least 1 cover call. And then you can scale the position if you had more shares. But you have to realize, people say, well, why would I do that? And, what's the downside? The downside is you cap your upside potential. And I believe SoFi is going to make quite a bit of money. And I have price targets of $75 over the next couple of years. Really depends on a couple of things and rate cuts and the feds and what they do with the interest rates. All those will affect the price and how well it does and how well SoFi continues to perform. But I believe SoFi is going to be up there. And if I don't want to lose 100 shares that I could have made sold for $75 a share when I got them for 17. You cap your upside. When they're gone, they're gone. And you would have to rebuy them at the new price. So that's just something to keep in mind. So I figured I would kind of bring in that selling cover call because we will at some point do that. But at this point, because we paid $17.36, I mean, I might wait for SoFi to actually start trading around $22 before I would ever sell these or potentially lose these 100 shares selling cover calls. So that's, but I do want it to be at least set up, and we intentionally did it, and we got it at a decent price, a fair price, because SoFi is extremely undervalued right now, especially because it was trading around, where was it at? SoFi was trading, let me move you over, give me a day. Let's shrink this down. SoFi was trading at almost $30 a share right here back in January. So we're just waiting for it to come back, and that's kind of where we are now. So yeah, if I sell cover calls up here, at least we have that $5, $7 a share times 100 shares. That's $700 plus the premium. If I gotta lose them, but if SoFi goes up to $75, you don't get that upside. But if the contract expires worthless, and I'll get into all that when we start selling cover calls, we'll do those together, and we'll talk about setting it up strategically in a way and the things I'm looking at. So enough about that. So remember, successful investing isn't about being busy. It's about making intentional decisions, staying consistent, and letting time work in your favor. Thanks for following along, and I will see you in the next video. Have a great day. Bye.